The laws of financial... That one just sticks in my head. Maybe it's because we use it every Monday. Talking Real Money. Hi, everybody. Welcome to Talking Real Money. And it's Monday, so it's the laws of financial physics. I'm Don. That's Tom. We're going to share with you another reading from the good book of financial physics, written by yours truly many, many moons ago. It's probably the shortest book on investing ever written because I went, why would I pad this out? It's just, have you ever noticed a lot of books, particularly money books, they have a lot of filler.
Oh,
just
totally.
Like extra words thrown in. Because investing isn't complicated enough to require a big epic tome.
And yet, there are many large epic tomes written about it.
It's just not that complicated. And the problem is most of the epic tomes out there, most of the books about investing, are trying to teach you something that can't be taught. And that is predicting the future. And that's kind of the topic today. Yeah, go ahead.
Rule 7 is no new news theory, which we'll touch on in a minute. But I think this generally
It's another 3N. No new news.
I think what this generally comes from is the belief that to be a successful investor, you have to have or know some predictive. There has to be an element of, I know this and I'm going to profit from it. That's the general thing. People ask me, like, what's the market going to do? I guarantee
like
we have a
we
client
know.
Thing. I know. And I'm going to say, I don't know. And by the way, very few people ask me that anymore because they know I'm going to say, I don't know anything more about the future than you do. But generally, that's what most of us believe, that we need to have to do that to be successful. Therefore, Rule 7 is so applicable to today's world because it's all about the information. And today the information comes so fast, so furious from so many places, right? Whether it's TV or the internet or radio,
it's
everywhere.
24/7 information.
It really is.
And there isn't that much information. It used to be. Back in the day, it was the financial page and the way back portion of your paper or the Wall Street Journal. Or, they had some money magazine, things like that. But there wasn't this constant barrage of news. And that's why there's no chance. There's just no chance that unless you're privy to inside information on which you can't trade legally, there's no chance you are going to know something that the rest of us and the market don't know.
Yeah, let's get to the types of information. The author points out that there are really two types.
The author.
I'm reading from Financial Physics. Yes, the author says there are two types of information about publicly traded companies. We're talking not about private stuff here. We're talking about, like publicly traded markets.
Yeah.
One
like
is that
SpaceX.
Public information, right, where the analysts release something or company conference calls or news, whatever it is. Hey, we're not going to meet our expected earnings. Hey, there's a problem. Hey, we're going to take a charge off. Whatever it is, that information that comes out. Mm-hmm. And there are many people that think you can trade on that.
Right. But here's the rub in that one. Those conference calls that they have, they tend to have those first with people at the big brokerage firms. They don't tell you first. They tell Wall Street first. And then they tell you. So who do you think has the jump on any edge that might exist from that knowledge?
Yeah, easy to figure out. We'll talk about trading in just a moment, where that is today, too. The other type of information, according to the author, is non-public. There are facts. This is a direct quote. There are facts known only to a select few with insider knowledge of the company's workings.
That would be like the CFO, the CEO, the COO.
Yeah, the wife of the COO,
right?
The author points out.
Some of the golf friends.
Yeah, the whispers, like, by the way, fill in the blank.
The Martha Stewarts of the. Oh wait,
you're getting to that part. Yeah, I mean, in case you're thinking that sounds pretty good, I'm going to call my friend who's the, CFO of XYZ Corporation. Well, it is illegal to buy or sell stocks based on insider information. In case you forgot, because you don't hear much about it anymore, right? Every once in a while, but it doesn't get the attention it got certainly in the 80s and 90s when you had some huge cases.
Call me cynical. Call me suspicious. You ever wonder why there are fewer prosecutions of like insider trading, of sort of cheating in the money markets? I mean, I'm not saying anything specific.
Yeah, you are.
Or
Yes, you are.
I'm not saying anything specific. I may be hinting, but you ever wonder why the government isn't going after insider information, insider
They're
trading?
still doing it. There's people doing it every day. Of course
Yes.
they are. Yeah, because they don't care, because they've been directed to spend their time and attention on other,
Things.
important matters. Yeah, I mean, but it's still happening. Is it dumb?
Winking
Yeah,
about
it's really dumb.
kleptocracy. We're winking about kleptocracy.
It's really
That's
dumb.
Yeah, I'm sorry.
So okay, so let's just assume that you're smart enough to say I'm never going to do that, which I think you should. Sometimes I hear these cases where people make $1 million on it and think it was really smart, and they're like, "You're going to go to jail for like 5 years for $1 million? That's not worth the payoff, there, people."
Yeah,
but dumb. But let's assume.
Well, particularly, hold on. There's another angle to that too. Usually, if you get caught, not only do you do the time,
you guess what?
but you pay the money back.
You don't get to keep the dough.
You don't get to. You're thinking, okay, if I just do 5 years and I get $10 million. $2 million a year, good compensation, maybe, for sitting in prison. No, you don't get to keep it.
The money is returned. Okay, so let's just and so go with me here on this one. You're not going to be trading on insider information, I hope. I mean, you're smart. You're listening to this podcast. You've been around. You get that that's a bad idea. So that means that if you're going to be a trader, which we'll talk about in just a moment, why I think that is really tragic in today's world, that you're going to have to rely on information that's publicly available. You're going to have to read something and interpret it. You're going to have to hear from somebody else that says there's something to pay attention to. All those other blathering talking heads that are out, and there's so many of them now. It's sad that the cottage industry is, frankly, larger than it's ever been. It's so big. There's so many, and there's so much information that is passed off as actual independent information, which is not. Oftentimes it's a sales pitch for something. But let's just assume that you say, no, look what happened. Tesla is not performing the way it's expected. Not Tesla, SpaceX, or Tesla, or
both.
whatever is not performing the way it should. So I'm going to short, or I'm going to whatever I'm going to do to try to make profit from that. Here's the challenge. Even if you're right, even if this great knowledge that you found and figured out that what the future is going to look like because of the information provided, you have to trade so quickly. So if you've forgotten, here's the reality about trading stocks today. If you put in an order for a buy or a sell, the computers that the major houses now use can see that coming and trade ahead of you. It's astounding. They're literally
I don't understand it,
I don't
really.
either.
And I'm
quick.
really good with tech, but I'm going, how does it know it sneaks ahead of you somehow?
And guess what? They'll put a trade in before you're hit. It's just shocking. So it's at the end of the day, we're going to tell you all that's futile.
Well,
There's
okay.
a thing,
At the end of the day, we're going to tell you not only is all that futile, there is no edge available to you.
Yeah.
No edge whatsoever.
Yeah.
So you have very few choices if you want to make money from your money. And those choices come down to, again, the dull, boring stuff we talk about. Sorry, there is nothing else. We wish we could impart secrets. Our audience would be much bigger than it is if we claim to have the secret sauce that would make you more money than the market. And there are plenty of people who will lie to you and tell you that. We're not going to do that.
Yeah. So instead, we invite you, the author mentions this here, the efficient markets hypothesis.
Yeah, really. All the knowledge that can be known is known.
Yeah. He writes, securities markets are reasonably efficient since most of the information about a security is readily available to almost every investor. Therefore, securities prices reflect all of the known data. Are there some inefficiencies? Sure. Are there some ways you could trade on something that people didn't see? Absolutely. But in the long haul, in the aggregate, all of us together, very few people can do that. Almost none in today's world. We'll talk more about that in a future podcast about how poorly actively managed funds continue to do, where people are trying to buy and sell stocks and time markets, all the rest of it.
Yeah, it's coming up later this week.
Yeah,
on
but the
Talking
thing
Real
is,
Money, the exciting show.
Yeah, thank you for that. But there's just there's no knowledge that I have that says you can do this successfully. In fact, quite the opposite. In fact, if you think back a few years, what was the name of that outfit that was running around telling you how easy it was to trade, and they had all the classes, and you heard their all over the radio.
Online trading academy.
Yeah, everywhere.
Oh my gosh, they must have spent millions on
I had a friend who was, radio guy that used to voice their ads, and I said, dude, that's a scam. No, it's not. I'm in the program, make millions. Whatever happened to all that? I mean, these things come along. Everybody gets, they're going to be
now
really
you raise
smart.
another one of those questions.
It's going to make me a lot of money. And then the next thing you know, it's like, whatever happened to that person? Whatever happened to that system that was going to make it so easy to make money? There isn't one. It's sad. Here's the thing. Accept market returns, accept market returns and your life will be better. This is the challenge, right? I just take what the markets provide over the long haul. Sorry. I wish the news was better than that, but it's frankly not.
I didn't even know this. This is from the Federal Trade Commission 5 years ago. Yeah, and it's about 5 years ago or so they sort of faded away.
Oh, okay.
Online Trading Academy was prosecuted by the Federal Trade Commission. They were sued by the Federal Trade Commission for deceiving customers for years with claims that their training, people who had their training were likely to generate significant income. And they announced that they had to return millions of dollars to consumers.
Which no doubt they did, right? I'm sure they ran right to the bank and got the money.
Of course they did.
Because they're making so much money with their fancy trading system. That's the other thing. These people that sell these trading systems, if they're so smart, it's so good, why are they sharing it with you? Why don't they just do it and make a gazillion dollars and, buy an island in the Pacific somewhere? Doesn't make sense to me at all when I hear that.
Oh, yeah. They made the founders turn over money.
Oh, yeah.
Oh, yeah. Wow.
Yeah.
So, that can hurt when the government takes all your ill-gotten booty. Your ill-gotten booty.
Your ill-gotten booty. So Rule 7 is so spot on. It's so important in today's world that I think it's worth rereading every morning to make sure you're not doing any of these things that could be
And if you're
harsh.
Thinking about doing some things that may not be good, you think they're good, you heard they're good, you're going to try them, before you do any of those things, well, here's one of the things you ought to do, and that is go to our website, talkingrealmoney.com. Same name as the show. Pfft, what a coincidence. There you'll find the means by which you can ask questions of us. There are two ways. The one Don prefers, I'm looking right at it. There's a little green button with a microphone on it in the lower right corner. You push that button, and then you speak your question to me, like it'll be on the Friday podcast. Kind of like the good old days of talking on the telephone. Apparently, we don't like that as much because the other option is going up there to ask a question and typing a question, which goes to Tom, who has a stack of them so thick. It's actually, he uses them for exercise. It is a little paper pressing. Which
is about all I can lift.
To bulk up that upper body. It wasn't bulked up enough already.
Yeah, bad enough.
So, anyway, without further ado, here comes...
Question. Input received. You typed it out, you sent it in. Now the answer unit will be... Tom Reds! Your questions.
Oh, and speaking of music, before we get to the questions...
Yes.
There was a little theme song. You know that I've been putting new theme songs at the beginning of every episode, right?
Dude, you produce more music than Taylor Swift does. So, come on.
I cheat a little. It's like AI. AI helps a lot. I mean, I couldn't make this kind of music. And if I hired people, it'd be, 3,000
The Don McDonald singers have been very
But
busy.
I had a request from a listener. Please put the music online. And I didn't ever think about that. I didn't think people would actually want to listen to just the music.
So they can just sit there and listen to all of your fancy jingles?
All the ones we've used so far with a bonus episode. It's at talkingrealmoney.com, and it's over in the right-hand column where it says, what would you like to do? And down at the bottom it says, listen to show music. And you click on that, and there's this playlist from SoundCloud, which I used. And so you get the things we've used on the show so far, plus this little bonus that I'm going to play right from the site. See if it'll play.
Everybody gets it wrong. The wrong year, the wrong door, the wrong loan.
right, so you can listen to that little bonus track there, too, along with all the other music at talkingrealmoney.com.
This is Casey Kasem in Hollywood.
With
Don
the top
McDonald's
40 money
latest
hits.
hit. Yeah, I'm tuning in next week to see if it's in there, dude. So,
All right,
good
I'm
for
gonna
you.
hold on. I have this crazy idea. Tell me if this is crazy or not. Okay, I mean, I've got Everybody Gets It Wrong, which is about how you make mistakes with your money
Yes.
when you're young.
Yeah.
And then I got another one that's going to go up a little later on this that I just wrote up the lyrics to. But here's my crazy idea. I don't think there's anything that precludes me from creating a best of Talking Real Money hits and putting it up on Apple Podcasts and Apple Music and Spotify. I don't think there's anything that keeps me from doing that because I
think
own
you're
the
right.
rights.
Yeah, and I think if it goes big, then we may just put this whole financial thing aside and stick right to the songs.
Money music going platinum.
My daughter keeps saying, those aren't jingles, Dad. Those are songs. I'm like, okay, fine, fair enough.
Anyway, so go listen.
Good.
Now let's get to the exciting. This is the part of the show that I look forward to every day. Tom reading your printed words from a paper page like the good old days.
And from Rhode Island, Richard writes, hi, Don and Tom. First, I really enjoy listening to your show and Tom's jokes.
Oh, no, not
You're gonna
another
be-
one.
Question right away.
There are a lot of people with bad taste in our audience,
His
apparently.
question is, what are the pros and cons of using JAAA for the bond portion of my portfolio in lieu of BND? JAAA seems to have less volatility over the past 5 years with similar dividends. Now, okay, just a mild correction here. It wouldn't be dividends that fund would be paying out, would it? Wouldn't it be interest? I could be wrong,
you know, that's an interesting. What the symbol is? What again? JAA.
AAA.
JAAA. Okay, the
Yes.
Janice Henderson AAA. Okay,
You get it.
here's the
Right.
thing. It has
Yeah.
AAA in the title,
And
but then the next three letters are CLO.
which,
Now, do you know what a CLO is?
if you
Tom
think
does.
back to 2008, you're going to remember it pretty well.
No, it was CMOs.
CMO, that's right. Collateralized
Then it
mortgage
was
obligations.
It was CMOs, then CDOs. There's
Doesn't
collateralized
L come
debt
before
obligations.
M though? Anyway, so
And by the way, a lot of those AAA CDOs and CMOs ended up not being AAA.
so
They
this is
didn't
collateralized loan obligations.
which means they're private notes, but
Yeah.
they've got collateral behind them, supposedly. But here's the problem with collateral. Collateral is worth what it's worth today, but it can be worth less than today tomorrow.
Yeah, I just was reading about downtown Seattle where the the value of buildings, office buildings, is about half of what it was in 2019.
And there, ladies and
Shocking.
gentlemen, lies some of the collateral.
Yeah,
As a
exactly.
matter of fact, I'm looking at some of the paper that is in this portfolio, and a lot of it is real estate investment trust paper. And yeah, sure, it's paying almost 5%. Sure, it has been less volatile.
Worked until it didn't.
Has been. Remember, though, CDOs and CMOs were brilliant investments right up until they weren't.
Yeah. If you want to see this, I'd say see me soon. It wouldn't be an alternative for me for BND. No.
No, I believe it's because of the low volatility, they get a low risk score. But nobody is taking into account, because you can't, the potential downside should we enter into a recession that destroys the valuation of a lot of these assets that, as we know with private equity, a lot of the managers of these private equity portfolios exaggerate the values. Like there's incentive for that to them.
Yeah. Until the day arrives when need to,
Would I use this in my portfolio? Not a snowball's chance in hell. No.
No way. No.
Nope.
Sarah writes us from soon-to-be Chocolate, Florida.
Oh, cocoa.
Oh, Cocoa, sorry.
Yeah, there is no chocolate in cocoa. Cocoa is actually the inland part, and then there's Cocoa Beach, which is more.
Oh, okay. I'm glad you
known.
clarified that. So,
Yeah.
hi, Don and Tom. I'm a 24-year-old student currently working on my bachelor's degree. Wow. For all my college years, I have received little or more often no financial aid. I didn't understand why, but now I've come to the conclusion it's because I've always been an exceptional saver. To resolve this, I'm considering moving the majority of my savings into the 529 my grandmother has for me. How much should I leave out for emergency savings, or could my Roth IRA be a substitute for emergency savings, since this is the only asset that doesn't count against me? I don't know if I know what that means.
It counts against her for aid.
Okay, fair. I have 4 to 5 years left in school, including law school after graduation. Well, congratulations on that. I support myself fully with no parental assistance. Would you like to talk to my kids? And live off about $2,000 a month.
Daughter.
Wow, which is a little. I'm trying to understand this. Okay.
Yeah, I get where she's going. She
wants to limit any risk to the
she doesn't want assets that show up on the FAFSA.
Exactly. She should have spelled that out.
And at her age,
yes.
she doesn't need a lot of emergency money.
No, I wouldn't think. Only $2,000 a month is what she's spending.
Yeah,
so that's pretty low.
maybe $10,000 in emergency money. Not going to have a big impact on your FAFSA. Not gonna. No, your Roth should never be used as emergency money. That is, really last resort.
That is
long
term.
Your life is threatened and you're going to die without it. That's when you use it. That is long term. As a good saver, no, don't put money into the 529. You got a job. If you haven't fully funded a Roth, fully fund your Roth.
Yeah.
Yeah, I see why you'd want to put it in the 529, but I don't see a
No, I wouldn't put it back in there. No. From Parsons, Kansas, John writes, hello, I've got BND and BNDX. That's the total bond and the total international bond. I'm thinking about adding an emerging markets or high-yield corporate bond fund ETF for a little extra yield. What do you think?
No.
Thank you for the common sense advice, easy understanding way of speaking. Apparently they're listening to me, not you. Emerging markets debt or high-yield corporate debt? No.
And again, because you're looking at it from the wrong direction. You're looking at bonds as a yield generator. We don't give a flippin' flop about yields. That's not why we own bonds in a portfolio. They exist. Fixed income in a portfolio exists for one reason. That is reduction of volatility. When you get into emerging markets and junk bonds, you start getting into volatility that rivals the volatility, or has in the past, rivaled the volatility of stocks. You don't want to add another stock market volatile style asset to your portfolio, because guess which one has historically made more money? The stock-like volatile portfolios or the stock portfolios? Be the stock portfolios. So if you're going to accept volatility, get the one that has provided in the past the best return on your dollar for the degrees of volatility. No, that just complicating it unnecessarily.
And what does the expression "more money's been lost reaching for yield than at the end of a gun"? I always like that one. That's exactly what you're trying to do here. You want to make a little bit more, and you're doing it.
If you want to make a little bit more, allocate less to bonds and more to stocks, but understand that you're accepting more risk, just as you would be accepting if you added emerging markets bonds or junk bonds.
Thank you, Mark.
And I hate calling them. By the way, we have to stop calling them high yield bonds. That is the industry's moniker to make them sound more palatable. Oh, high yield. No, junk. They're junk bond funds. It's like life insurance. We shouldn't call it life insurance. It's not ensuring that you live. It's ensuring that somebody wins the lottery when you die. So it's death insurance.
You just ruined an entire industry in one moment there, sir. Well done. New Lenox, Illinois. Mark writes, hello, legends.
Ooh.
I guess that means we're that close to you-know-where.
Yeah, exactly. When you're legendary, aren't you usually dead already?
Close to it. Two-part question here. Number one, can you explain the mechanics of rolling over a workplace for Roth 401k to a new custodian? I believe that I first have to open a rollover IRA account, a rollover IRA, as well as a Roth IRA at a new custodian. If you're moving a Roth 401k, then you just need a Roth IRA to move it to.
Doesn't matter. It doesn't have to have any kind of fancy nomenclature.
No.
And the simplicity is
in
off
today's
the charts
world?
these days.
Oh, yeah.
You go to a Schwab, you go to a Vanguard, you go to a Fidelity, you open the new account, you give them all of the account information on the 401k, you fill out the transfer forms online typically, and boop, they bring it over.
They'll do it by 5. I mean, it's very fast today. Then do I simply move my contributions over to the Roth account and the entire employer contribution amount into the rollover account.
Whoa.
Because remember now, what he's saying is if the money is if it's pre-tax contributions from the employer, then he's right. That does have to go into an IRA. That's not a Roth 401k. That's a
okay. So he's not talking, because wait a minute. It sounded like he's talking about new money. But no, he's talking about old money.
Yeah, old money. Yeah, he's saying the contribution. So yes, if those are pre-tax traditional, then yes, you will need to open a rollover. That money will go to the IRA, not the Roth. So I hope I'm not making this too confusing. But the post-tax Roth 401k directly goes into the Roth IRA.
The custodians
they'll figure all that out for you.
They'll figure all this out for you. They'll put them in the right pots. And this is one of those times. Particularly in this instance, where it pays to wait on hold for a little while and actually talk to a human being at Schwab or Vanguard or Fidelity or wherever.
But
you notice I didn't mention Robinhood. I didn't mention Robinhood, Tom.
When are we doing that segment? I have all the stuff ready. I even gave you audio from the people, the idiots that run that company, to help you. But apparently it's not going to make the
We'll
cuts.
do it. I know you're really upset about Robinhood.
Only because, never mind. I don't want to let the cat out of the bag. So anyway, back to your question. Yes, there are people that will help you with this. They'd love to have your money.
Wait a minute. Don't they have the Robinhood thing backwards? Don't they rob from the poor and give to the rich?
Exactly. They are thieves, as Robinhood was, correct?
Ooh,
so
no. That's your opinion. Yeah, that's Tom's opinion.
Well, no, Robin Hood was a thief, was he not?
Oh, but you're talking about the legendary Robin Hood.
Yeah, that's where the name comes from, right?
The Merry Men.
Steal. Oh, we're not going to impugn our friend Paul Merriman just because he was associated somehow with
Robin Hood and Merry Man.
Let's not do that. Anyway, so great questions. Keep them coming. By the way, we're moving into the fall months now, as you may have noticed by the declining amount of sunshine and cooler temperatures, at least here in the Northwest.
I was going to say, wait, it's still 98 in Florida.
That means I will be indoors more in the coming weeks and months. Plus,
the
daughter
paler and paler
is leaving
and paler.
soon. So I will be looking for more calls from all of you, more requests for help, because I like talking to you. I got to have more time to talk. So let's get to it. Get to the website and ask for help. How about that?
And he does like actually having conversations with you. So there's a couple ways to do it. You can do the ask a question and we'll answer them on the show, or you can speak them, use the mic, or Tom will, if you put in your question, you might like to have a phone call. He'll record the call and put it on the show, or you can make it all private and you can meet with one of Pella's real life fiduciary advisors who doesn't sell you anything. And Tom's one of them. So just go to talkingrealmoney.com, click on Meet an Advisor, ask a question, or click the mic. There's so many ways to get your questions answered. And remember this. This is so important. You must remember this. We are here Monday through Friday, unless there's a holiday.
Talking Real Money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.